American Eagle, Gap, Nordstrom, Victoria's Secret, all up following the holiday. But which names make Morgan Stanley's list of Black Friday winners? Let's ask Alex Straton, equity analyst over at Morgan Stanley, the expert on the topic. So let's just start off with a big, bold question. Who won and who lost over this holiday shopping weekend?
Yeah, I mean, getting right to it, I would say the winners or the outperformers and the laggards as we saw them, and granted, this is a more limited data set, but on the winners front, we had Aerie, which is a part of the American Eagle portfolio. We had Gap, the banner within the broader Gap portfolio. Hollister, which sits within Abercrombie, and then Old Navy. Those are the ones that we saw as winners. And the way that we measure that, to be clear, is that all four had higher line counts despite either unchanged or even lower promotional levels. So what that means is they were able to garner the attention of the consumer without sacrificing margin. So that's how we characterize it as winners. Can be subjective. I think, on the other hand, there were some laggards per the data in our check, and that included American Eagle, Nordstrom, Pink, and Torrid. And really, it's the same type of methodology. And this group really fell into camps. They either had lower traffic on similar promotions compared to last year, or they had unchanged traffic on higher promotions. So effectively, it's can you drive traffic and how much does that hurt your bottom line as you're doing it? And so I will say this only reflects a single day. Holiday shopping is becoming less concentrated around single days. So it's not a perfect gauge of quarter-to-date performance, of holiday performance in aggregate. We have a lot to go. We have 8 of the 10 largest shopping days ahead of us in the season. So there's much more to go from here.
Alex, there's an argument to be made that consumer balance sheets right now are perhaps not as strong as they were a year or so ago because of the dissipation of stimulus money, that sort of thing. On the other hand, comparisons may be easier for some retailers given bloated inventory levels from last year, which have righted themselves this time around. On balance, does it mean that we're net okay, or does it mean that maybe these retailers have stuff left to do for the rest of the season?
Yeah, I mean, it's a great point on where the consumer stands. And I think this is the first time in a number of years because I've been a little bit more optimistic heading into holiday, but I caveat that as cautiously optimistic. And what that means is we do not expect like strong demand or a change in fundamentals for our retailers. Our businesses are continuing to operate and probably will in the fourth quarter at both sales and profitability levels that are below pre-COVID trend on average. But really, my more optimistic forecast is a function of a pretty low bar. Our retailers have set a low bar throughout the year and for the fourth quarter so far in the third quarter earnings season. They've planned inventory and hiring conservatively from the statistics that we look at. And they're going to benefit from a favorable calendar this year that I think people tend to overlook historically. So when I take that all together, it does feel like the market sentiment could be too bearish on these stocks for what, to use your words, could be an okay holiday. This could really, lead to a January rally in my space, which, if you might remember, is very similar to the dynamic we witnessed last year on a late inflection in holiday trend.